So a very early morning to you. So thank you so much for joining us at what is, I suppose, a quite ungodly hour for you. So this is Rachel Z. Friedman, and she's an assistant professor at the Buchman Faculty of Law in Tel Aviv University. But as I mentioned, joining us from Boston today. Her research and teaching interests include the history of political and economic thought, theories of distributive justice, comparative welfare law and policy, and the political and ethical philosophy of Aristotle. She's the author of a book, Probable Justice, Risk, Insurance and the Welfare State. And today she's going to give us a talk on price and the politics of probability. So, croeso mawr, warm welcome to you, Rachel.
Thank you so much. Thank you very much for having me. I, first of all, want to thank Hugh and the other organizers and administrators who made this event possible. I'm grateful and honored for the opportunity to be here or remotely with you in such impressive company and to share a bit of my own research with you. The title of my talk is Richard Price on the Politics of Probability, but I'll actually be focusing on just one aspect of the relationship between Price's political thinking and his work on probability and life insurance mathematics. Specifically, I'm going to speak about Price's important but often overlooked role as an intellectual progenitor of the modern welfare state, and in particular, its core idea, social insurance. This might seem like a perplexing claim from our perspective today, given, for example, Price's suspicion of various forms of state power and his concern about public debt. Yet I hope to convince you by the end of my talk that Price indeed deserves pride of place in a line of thinking about the moral, political, and economic functions of insurance that eventually found expression in modern welfare policy. A word about my background. I'm a political theorist and legal scholar with primary research interests in theories of distributive justice stretching back to Aristotle and the intellectual history of the welfare state. It was from this perspective, through my investigation of the place of insurance in modern political thought, that I discovered Richard Price. And so, while my argument today draws on a number of the same texts and contributions referenced by John Tucker in his very stimulating presentation yesterday, I'm coming to this topic from a different disciplinary perspective and with a different contemporary interest. Today, a number of Price's correspondents and peers, including, for example, Condorcet and Payne, are often invoked as progenitors of modern thinking about poverty relief. Price's name comes up far less frequently, if at all. Yet I would submit that he is just as deserving of consideration as an intellectual forerunner of modern social policy as his more widely credited peers. Before turning to Price, I'd like to say a bit about social insurance more generally. By this term, I mean the provision of event-conditioned benefits through a publicly orchestrated system of contributions and distribution. Social insurance has been a central pillar of the welfare state since the latter's inception in the late 19th century. The rubric includes public pensions, unemployment and disability coverage, national health insurance, and more. The basic logic supporting these policies is that people who are in a, quote, good state, healthy, employed, earning a reasonable wage, etc., will generally wish to protect themselves against the risk of falling into a bad state, such as illness, unemployment, or poverty. To secure this protection, they pay a premium that's correlated in some way to their age and situation into a designated fund, which is typically invested and portions of it redistributed to anyone who encounters the eventuality in question. Today, according to the OECD's measure of net social spending, publicly provided social insurance accounts for between a quarter and a third of GDP in advanced democracies. As I argued in my book, Probable Justice, from which portions of this talk originated, the idea of social insurance, if not the term itself, first emerged in the final third of the 18th century. But the practice of mutual provision against contingency, of course, goes back much further. In England, for example, guilds had long been a source of aid for working people and were succeeded by cooperative associations, trade unions, and friendly societies, which typically provided benefits in the event of poor health or death, including burial expenses. The earliest plans for social insurance, understood as state-orchestrated coverage against economic risks, particularly for wage earners, proposed to extend the logic of mutual provision to larger groups and even to the polity as a whole. These schemes were inspired by contemporary mathematical developments and by the related success of actuarial life insurance. Such insurance promised to offer financial security to members by pooling the risks of similarly situated individuals and creating a large common fund from their many small contributions. Because payments were based on mathematical probabilities calculated from mortality statistics, such a system allowed everyone in the group to reliably and sustainably share the burdens of a misfortune that happened to strike any one of them. The enactment of full-fledged social insurance policies would, of course, have to wait until the 1880s, when several European countries, including Germany and Denmark, instituted national-level schemes and inaugurated a trend that would spread across industrialized states. Yet the intellectual groundwork for these developments was in key respects laid in 18th century Great Britain and France. And in this story, Richard Price played an important role for three interlocking reasons. First, he was deeply familiar with probability theory and regarded it as a key to the advancement of humankind. Second, he advocated for annuities and insurance as means to property ownership and personal independence. And third, he endeavored to spread mutual insurance practices across social classes, especially to the working poor. Together, I submit these three strands of Price's thought amount to an original and compelling argument for state-encouraged mutual insurance to promote both personal and political liberty. The generation of thinkers responsible for laying the intellectual groundwork for social insurance included Condorcet, Laplace, Priestley, and a host of lesser-known figures, some of whom we will meet shortly. Of these, Price was among the most well and deeply versed in contemporary mathematical developments. He contributed significantly to life insurance mathematics with his influential reference work, Observation on Reversionary Payments, first published in 1771. Yet he had earned admission to the Royal Society even earlier. In 1763, he published the now famous essay by his friend, the late Thomas Bayes, on what became known as inverse probability, a technique that allowed for the assignment of probability values to causes or underlying frequencies of events on the basis of empirical observation. This was one of the most significant innovations in mathematical probability in the final third of the 18th century, and lent support to attempts to calculate probabilities for social and political phenomena, for which statistical data was at the time becoming increasingly available. Bayes, born in London and elected to the Royal Society in 1742, was, according to Stephen Spiegler, interested in probability, perhaps because of an earlier work by Thomas Simpson, which solved a probabilistic problem by focusing on physical observations rather than games of chance, as had been common at the time. In the seminal paper published posthumously by Price, Bayes found the chance, given a set of prior observations, that the probability of an uncertain event will fall within a specified range of values. Invoking the physical device of a flat, square table and a series of balls rolled thereon, Bayes analogized the unknown probability to the horizontal coordinate of a single ball rolled across the table. A second ball is then rolled repeatedly, with each time it lands to one side of the original ball counted as a success. These represent the observed trials. This setup allowed Bayes to compute the probability that the location of the first ball falls within a certain range, given the number of observed favorable outcomes from the rolling of the second ball. With this innovation, Bayes developed the foundation of what is today known as statistical inference. Because this technique allows for finding the likelihood of an unknown state of the world, given the observed outcomes of events, for its pioneers and early adopters, it appeared to hold the key to a range of applications to social and political affairs. Compared with the independent treatment of French natural philosopher Pierre-Simon Laplace, Bayes' contribution was less widely noted until the 20th century, and Bayes himself did not attempt to apply it to particular examples. Price, however, readily grasped its far-reaching potential as a guide to judgments about uncertain phenomena, especially in the wake of Hume's skeptical treatment of the problem of induction. Where Hume had questioned the logical basis of inferences made from prior experience, Price found in Bayes' method a potent tool for forming rational expectations about the outcomes of uncertain events. In his introduction to Bayes' essay, Price explained that his friend's contribution, quote, is by no means merely a curious speculation in the doctrine of chances, end quote, but addresses a problem that required resolution in order to provide, quote, a sure foundation for all our reasonings concerning past facts and what is likely to be hereafter, end quote. Price concluded that Bayes' finding revealed distinctly and precisely to what extent recurrent events stem from stable causes. The inverse, or in Price's terminology, converse method, thus promised to uncover the guiding presence of natural laws and to free individual judgments from the burden of epistemic doubt. Far more than a mathematical exercise, in fact, Price appears to have seen probability as a means to individual and political liberation. On the individual level, it promised to encourage the proper use of reason and foresight, allowing people to become masters of their own minds and futures. On the political level, as part of the broader project known as political arithmetic, it promised to promote an enlightened citizenry that would support judicious policies and oppose the incursions of a despotic state. For example, reversionary payments contained a lengthy discussion of the national debt, which Price feared would breed corruption by making some citizens overly conservative and submissive to government. Reducing the debt was therefore necessary to prevent undue dependence on the crown and discourage acquiescence and servility. To that end, Price proposed a sinking fund, which would pay down the debt while in principle protecting public money from corrupt appropriations. Mathematically informed policy could thus operate as a kind of check on the powers of the state and on the temptations of citizens to place narrow self-interest above the common good. Probability also appears to have supported Price's faith in the continued improvement of the human condition. Not only could mathematical advancement in itself be seen as proof of the progress of reason, but the inverse method supported an expectation of further progress based on observation of what had already been achieved. As he explained in his 1787 speech, The Evidence for a Future Period of Improvement in the State of Mankind, nothing can direct us better in judging of the manner in which future improvements are likely to proceed than reflecting on the course of human improvement as it has hitherto taken place, end quote. In light of such evidence, the quote, happy termination of human affairs in this world is an expectation no less credible and probable in itself than it is encouraging, end quote. Price's faith in the improving power of mathematics had, for my purposes today, two especially significant practical expressions. The first was his effort to rationalize annuity and life insurance societies in order to prevent the various forms of financial mismanagement that had characterized then existing schemes. The second was his push to introduce actuarial calculations into the operations of working-class friendly societies. Together, these two efforts supported a novel case for mutual insurance, encouraged or even orchestrated by the state, as a means to widespread property ownership and independence. I will now rather briefly consider each one in turn. I begin then with Price's contributions to the field of annuities and life insurance. Price served as an early mathematical advisor to the Society of Equitable Assurances on Lives and Survivorships, the first life insurance company to use mathematical probabilities to price its policies. The preamble to the Equitable's deed declared the great benefits to be derived from life insurance based on premiums proportionate to the chance of death and the time of coverage. In contrast to other existing schemes, such actuarially informed insurance promised to accommodate a wider range of customers and provide benefits with far greater reliability, thanks to its use of empirically determined probabilities in setting its premiums. Price echoed these claims in his reversionary payments, which offered calculations for life insurance and annuities in order to promote greater financial sustainability in then existing insurance societies. He noted that whereas under speculative and mismanaged schemes, quote, the gain made by some will be so much plunder taken by others, end quote, mathematically sound arrangements draw responsibly from all and return to each his due. Price drew explicitly on the example of the Equitable to advocate actuarial reform for other insurers as well. Probabilistic insurance on this view offered a model of fair and reciprocal self-protection. By setting aside a small portion of their income today, individuals could provide for themselves and their families should they encounter a situation of need tomorrow. Alternatively, if they did not find themselves in need, their contributions would fund the security of those who did. Because such schemes aligned contributions with expected benefits, Price argued, they're consistent with the demands of, quote, reason, justice, and humanity, end quote. As the last phrase suggests, Price's advocacy of reformed insurance practices served a normative vision that extended beyond the viability of particular schemes. Within this vision, I submit, the unique significance of insurance lay in its ability to promote both an individual and a common good. Successful insurance societies would grant benefits reliably to all, thereby promoting their personal security and the preservation of their property through time. Such schemes would also promote political liberty, rendering all citizens more financially secure and less prone to dependence and vice. Because of these promised benefits, the personal and both of these promised benefits, the personal and the collective, rested on the close connection between insurance and property. By the time Price wrote Reversionary Payments, the connection between life insurance mathematics and property rights had already been well established. As David Bellhouse has shown, many early mathematical calculations of annuity values were connected to leases for land, which were often granted for a set term of 21 years or 3 lives. Here, the landowner was like an annuitant, with payments received in the form of rent, and the present value of the annuity was part of the value of the land. The original connection between annuities and property was thus forged in the early 17th century to support landowners who, due to changes in land management policy, may have had new impetus to calculate the value of their leases. Price, however, sought to use mathematical probability to promote security and independence for owners of mobile rather than landed property. He wasn't the first to do so. Edmund Halley, for example, whose 1693 mortality table introduced individual life expectancies into the determination of annuity values, had noted that his calculations could be applied to reversionary annuities for the support of clergymen's widows and others who lacked access to land or other rents. Over half a century later, the Equitable advertised the great benefits of life insurance for those, quote, whose subsistence depends upon the life of the person assured, end quote. Such clergymen, lawyers, artisans, manual workers, and others would, the Equitable's deed averred, gladly pass on to their loved ones, quote, a portion of those benefits which their labor whilst living was used to procure for them, end quote. Later advocates of the new or reformed friendly societies in the first decades of the 19th century would also appeal to the prospect of property ownership, recasting their members as joint proprietors of society funds and owners of their own insurance policies. Price made a similar argument, but in the service of a much broader appeal to liberty and self-government. As Peter Buck argued, Price looked to annuities to serve the same function that landed property played for the Commonwealth men. Reacting to the enclosure of farmlands, Price worried that the great majority of his compatriots would be deprived of the independence that property ownership allows. By turning small farmers into wage laborers, the Crown had reduced self-sufficiency and increased economic inequality overall. Enter annuities. Like land, they could encourage Republican virtues and guarantee individual liberty through the generations. By encouraging effort and foresight and securing individuals' earnings, annuities would promote a kind of propertied independence, despite the trends toward urbanization, corruption, and inequality that Price elsewhere lamented. The same arguments apply to insurance, particularly in the wake of the Equitable's remarkable success. The Life Assurance Act of 1774, passed just 3 years after the first edition of reversionary payments, explicitly distinguished insurance from wagers by requiring a legitimate financial interest for all valid life insurance contracts. After this time, one could only legally collect on a policy if a person relied on the insured for income or was a creditor who would lose if the insured died before repaying his loan. Price's own discussion does not distinguish clearly between life insurance and annuities, either on practical or on moral grounds. Both types of society could generate fair payment and benefit schedules, provided they made judicious use of life expectancy calculations. In addition, insurance could provide security against other contingencies affecting a wage earner and his family, including illness and incapacity. Working-class mutual aid associations had long set out to provide elements of such coverage, but with wildly varying success. I now turn to Price's efforts to reform such societies, which were geared to what he called, quote, the lower part of mankind, end quote. As Penelope Ismay has pointed out, Price's initial concern in writing reversionary payments was with the largely middle-class annuity and life insurance schemes that had proliferated throughout the 18th century. Yet he soon joined the cause of promoting actuarial insurance for the working class and poor as well, through the movement to reform box clubs, as they were then called, or in more contemporary parlance, friendly societies. These societies had first emerged as local groups that brought together neighbors or members of the same trade for socializing and the pledge of assistance in the case of need. From their inception, British friendlies were voluntary, and they remained largely local, both in scale and in character, through the 1800s. Formed among men who knew each other or were in some sense part of the same community, the friendlies usually charged equal fees and paid a flat benefit to any member who encountered a situation of need, most notably sickness, death of the breadwinner, and old age. They also used a portion of the dues collected for club meetings, which members saw as central to the overall benefits of belonging. Price proposed a model for financing friendly society benefits that had a powerful influence on contemporary discourse about poverty relief. In 1772, he also lent his support to a proposal by mathematician and social reformer Baron Francis de Maseres that would have given workers in manufacturing areas the chance to buy annuities through their parishes to be paid out of the poor rates of the parishes themselves. Price published selections from Maseres's work as a supplement to the second edition of Reversionary Payments, where he argued that, with some modifications, the proposal would not only promote industry among workers, but also, quote, ease parishes of a considerable part of their burdens in providing poor relief, end quote. As part of his advocacy, Price supplied the tables from which annuity prices were to be calculated. Although this proposal, as well as the subsequent one of 1789, met with defeat in the House of Lords, a successful Reform Act of 1793 made Price's calculations the standard reference for friendly society contributions for the 3 succeeding decades. Following Maseres's proposal, English clergyman John Ackland also relied on Price's calculations to propose another plan for national level mutual insurance. This plan, founded on the basis of the friendly societies, in Ackland's words, and published in 1786, would have created a single compulsory mutual society for the entire polity. Learning from the failure of an earlier scheme, Ackland recommended that participation be mandatory for all, with the exception of those who possessed landed property. The effect of such a plan would be to quote, render the poor, to a great degree, independent of public charity by erecting them into such an associated insurance office as may secure to them a comfortable provision against all the accidents to which their station is liable, end quote. Price supported Ackland's plan as well, writing in a letter to the author that such a program would, quote, do the greatest good by affording in the best manner the most agreeable and useful relief to the poor, end quote. Price went as far as to say that it's impossible that the principle on which the plan was founded should not be universally approved, since nothing is, quote, more plainly equitable and reasonable, end quote, than that the poor should put aside a small savings from their wages to support themselves in the event of sickness, accident, and old age. The fact that such societies existed in great numbers proved that the principle already drew widespread support. Although Ackland's plan was never realized, subsequent reforms did grant important legal rights to members of friendly societies. One of these, known as the First Friendly Society Act, or Rose Act, freed members from some of the strictures of the laws of settlement. By explicitly recognizing that friendly society members were willing to work and industrious enough to save, the law made it significantly easier for them to obtain relief where they lived. These efforts promised not only to help relieve poverty, but also to promote the foundations of civil liberty. Price, of course, stressed that liberty requires not merely the ability to do what one chooses, but, quote, security for the possession of that ability which arises from a free government, end quote. It also requires, quote, the quiet possession of his life, person, property, and good name secured to him by being his own legislature, end quote. Price was therefore keenly aware of the threat posed by severe inequality of property ownership. With too much property, some individuals will co-opt power and use it for their own interests rather than the common good. With too little property, men fall into dependence and are poorly suited for citizenship. America, on Price's view, may have held the prospect of becoming a republican society based on relative equality in land ownership and economic circumstance. Britain, by contrast, quote, consists too much of the high and the low, of scum and dregs to admit of such a constitution. A country in this condition would certainly require practices that reproduce or approximate property independence in other ways. The fact that so many existing annuity societies failed to meet their obligations rendered reform particularly urgent, both for ending pernicious dependence and for extending the prerequisites of self-rule as widely as possible. In this light, Price's advocacy of actuarial life insurance and friendly society reform, including publicly supported mutual schemes, entail a novel and I would say powerful justification for what would eventually be known as social insurance. This justification rests on the secure and property-like character of insurance benefits, obtained or earned through probabilistically determined premiums and guaranteed through prudent financial management. It further extols the ability of such benefits to protect against financial devastation without discouraging personal effort, and thus to promote the reciprocal benefit of all participants. In this respect, I suggest Price was a key intellectual progenitor of the modern welfare state, the aim of which is not merely to alleviate poverty, but to promote equality of individual liberty understood as secure self-government for all. As I mentioned earlier, Price was part of a generation of thinkers who together laid the intellectual groundwork for the eventual emergence of social insurance schemes in the latter part of the 19th century. I've already noted Mae'r's plan, which claimed that giving workers the opportunity to plan for their own futures by purchasing annuities would encourage them to, quote, become more sober and virtuous in their ordinary course of life, end quote, and thereby increase the wealth of the kingdom as a whole. His proposal described the process by which poor residents would purchase annuities and mandated that a sealed and signed parchment be delivered as the proof of the right to future payments. He too thus regarded protection as a kind of property earned through contribution and guaranteed with the force of law. It also emphasized that the absence of such insurance would render the unfortunate a double burden on the public, which would not only lose the benefit of their labor, but must take on the expense of supporting them. Mutual insurance thus promised to align the personal interest of individual workers with the public interest in avoiding their indefinite maintenance. In 1787, Price's fellow radical dissenter, Joseph Priestley, also praised Mae'r's plan and voiced support for a similar one that would encourage forward-looking self-protection among the poor. Like Price, Priestley's support for such mutual insurance reflected an underlying commitment to property liberty. He introduced his plan with criticism of existing forms of poor relief that by simply granting a legal right to aid had encouraged dependence on the parishes rather than self-improvement. His proposal would use the poor's own efforts to their advantage, thereby encouraging, quote, a sense of independence and of dignity, end quote. The existence of the friendly societies already attested to the value of this idea, but because of their financial failures, property in them was insecure and they hadn't realized their full potential. The state should therefore, quote, do for these industrious poor what they are always attempting, but in vain, to do for themselves, end quote, namely, provide a fund into which they could deposit their savings to support their families when no longer capable of labor. An additional proto-social insurance proposal with striking similarities to Price's came from his correspondent, the Marquis de Condorcet. In 1785, Condorcet sent his Essai sur l'application de l'analyse à la probabilité to Price, possibly in response to Price's publication of a letter from Condorcet's mentor, Turgot. The two exchanged further correspondence in 1786, in which Condorcet thanked Price for sending him, quote, an excellent work, which may have been Ackland's pamphlet from the same year. Condorcet noted that whoever had, quote, first invented friendly associations on behalf of widows and children was one of the great benefactors of humanity, end quote, who had managed to, quote, make games of chance useful. While, quote, political arithmetic is still very far from making the progress it is capable of, I believe it to be the most useful of all the sciences, and that from which will result the greatest good for mankind in general, end quote. Condorcet's writings on social improvement stress many of the same normative arguments and practical means as Price's. In his late and unfinished The Sketch, published in 1795, Condorcet cited Price, Priestley, and Turgot as the, quote, first and most brilliant apostles, end quote, of the new doctrine of the, quote, indefinite perfectibility of the human race, end quote. Like Price, Condorcet believed that the probability calculus would play a central role in this process, providing the tools to improve individual reason and rationalize political economy. To this end, he proposed 3 publicly orchestrated, actuarially informed insurance schemes that would alleviate workers' insecurity and dependence. The first would have guaranteed to the elderly a continued livelihood based on their own savings. The second proposed insurance for widows and orphans. And the third would have paid a kind of subsistence income to the young. The aim of such schemes, on Condorcet's account, was to ensure that everyone is able to, quote, manage his household, administer his affairs, and employ his labor and his faculties in freedom, end quote. These thinkers thus stressed the potential of state-orchestrated mutual insurance to promote both personal liberty and a common good. In all of their proposals, one finds a commitment to forward-looking self-protection combined with mathematically informed mutualism, which promised to harmonize, in Condorcet's words, the interests of each with the interests of all. To further underscore the character and distinctiveness of this vision, it's illuminating, I think, to contrast it with that of another radical reformer of the time, Thomas Paine. In Rights of Man, issued in 1791 and 92, Paine proposed a series of tax-financed payments, including old age stipends, educational assistance, and maternity benefits to the poor. Intriguingly, Paine referred to these payments as a tontine, which is a type of insurance scheme that provides greater benefits the longer one lives. Such schemes are less mutualistic than the annuity insurance and insurance plans recommended by Price and others, which were designed to provide equal benefits in exchange for equal payments, and where there was an excess of accumulated funds to distribute those funds equally among shareholders. Paine also proposed to finance benefits through progressive taxation, making them available without the need for a prior payment or contribution. Paine departed even more decisively from the logic of mutual insurance in a subsequent contribution, his Agrarian Justice of 1795-96. Here, he proposed to create a national fund supported by an inheritance tax, out of which all citizens would receive a lump sum upon coming of age, and everyone over the age of 50 would receive annual fixed payments. Paine described these benefits as compensation for the loss of all men's natural inheritance following, quote, the introduction of the system of landed property, which has absorbed the property of all those whom it dispossessed without providing, as ought to have been done, an indemnification for that loss, end quote. The purpose of these payments was therefore to offer a form of redress for the suffering caused by what was essentially the theft or destruction of common property through private appropriation. It was not, as in Price's thought, to offer forward-looking mutual protection for those industrious and far-sighted enough to help themselves. Historically, it's safe to say, I think, that the insurance model carried the day. While the reform ideas of Price's generation were no longer as influential in the mid-19th century, when the practice of social insurance finally got off the ground, arguments for state-sponsored protection against various economic risks continued to rely on insurance as their organizing principle, and to distinguish clearly between insurance benefits and poor relief. For example, as François Huald has argued, in 1850, the French Legislative Assembly inaugurated arguably social insurance there by creating a national pension fund to channel workers' savings and providing state guarantees for individual savings accounts and the interest they generated. Bismarck's three seminal social insurance laws, enacted in the 1880s, took inspiration from the French precedent and established a contractual right to benefits that was not contingent on a demonstration of need. While clearly enacted under very different pressures and circumstances, these laws rested on many of the same normative arguments and practical means as the proposals we have considered. By way of conclusion, I'd like to say a few words contrasting the proto-social insurance proposals of Price and others with Paine's vision for a kind of universal basic income, or more precisely, a basic endowment. Examining these proposals together illuminates a subtle point that's not often recalled in intellectual histories of the welfare state, but which Price's thinking helps bring to the fore. It appears that the independence enabling power of insurance is related on this view not only to its status as a kind of property, but also to its reciprocal character. That is, mutual insurance promised to promote liberty both because it would be reliably granted and thus property-like, and because by securing themselves, citizens would simultaneously do the same for others. It's of course well beyond the scope of this talk to evaluate the comparative merits of contributory social insurance and an unconditional basic income. But my historical inquiry suggests that there are important normative differences in the justifications for each. Insurance advocates praise such practices for reconciling the individual's economic interests with the community's need to sustain itself ethically and financially through ongoing reciprocal relations. By contrast, the normative logic of a basic income, at least on Paine's account, is not explicitly or necessarily tied to a principle of reciprocity in the same way. As governments around the world increasingly consider basic income schemes, it's worth thinking seriously about why these early advocates chose insurance instead, namely to promote individual security and liberty while ensuring that every citizen is involved in sustaining the system from which she benefits. Insofar as the modern welfare state rests on such a view, or something like it, I hope to have shown that there's a good case for thanking, among others, Richard Price.
Thank you so much, Rachel. Diolch yn fawr. Really fascinating paper and opened up aspects of Price's thought that I, for one, certainly have not really engaged with or considered. Yeah, the same drill as previously. If there are any questions from the floor, we might take those first, and if those who are in the virtual audience can make it known that you want to ask a question either by raising your hand or putting something in the chat. Any questions from the floor, first of all?
Someone else a chance and then come to me.
Well, I don't think there's anybody else who wants to take up the opportunity, Randy, so, please.
Hi, thank you for that. I'm a working actuary, and I'm going to run out and buy your book. So, I mean, the first point I'll say is that insurance works when you have lots of people insured and you don't let people choose to join only if they're going to get more out than goes in. So universal insurance is the best kind of insurance. Now, while you were speaking, I was thinking about sort of 3 providers of insurance, and then I added a 4th one along the way. And I'd like to get your thoughts on which of these Price would have been able to imagine, which he would have supported. So, the possible providers are the mutual societies where a group of people get together for common reasons, hopefully not just insurance and getting more out than they put in. Then there were the parishes, which came up along the way as an important provider. Then you get to governments. You get quickly to government systems like Thomas Paine proposed. And far later, as capitalism took root, you reach the kind of point we have today where capitalists or shareholders set up an insurance system to make a profit that will go to those capitalists, those shareholders. So Price maybe wouldn't even have had the imagination for a capitalist kind of insurance. But what do you think he would have made of those 4 possibilities?
Right, great. Thank you for the question. So from his writings, I think it's quite clear that from both his own writings and from his support of the other policies that I mentioned, like Mae's's and Ackland's, I think it's clear that he supported both mutual societies and parishes as providers of insurance. And specifically, though, once sufficient mathematical methods had been introduced into their workings. And I think the support of mutual societies in particular relates to the final, your 4th provider. And I think you're right that at the time, and certainly the model of the equitable was not the model of a contemporary for-profit insurer, right? This was a model in which excess was meant to be redistributed to all of the shareholders. So this was not a system in which capitalists were deriving the majority of the profit. And that, I think, gets to, in a way, a similarity between the mutual societies and life insurance schemes that were inherently mutualistic in the way that the equitable was advertised to be or thought to be. Regarding government, I think, so as I read these other schemes, and maybe the distinction needs to be fleshed out more, but or made more of, but I see at this particular time a bit of a conflation between parishes and the state, insofar as this was a piece of the plans that were proposed at the time were meant to be pieces of legislation that would get the state involved, not directly by providing insurance itself, but get the state involved in offering these insurance products to the poor in a public manner. I don't see in Price himself a suggestion for direct state-provided insurance, but there were plans at the time that were circulating that did suggest that idea. So it was also in play in the late 18th century. Thank you for the question.
Lovely. Diolch yn fawr. Thank you, Rachel and Randy. So we've got a question now from one of our Zoom audience, Gareth Folk-Roberts, who I can mention to you, Rachel, is a mathematician who's written on price, and he says he has a small question for you.
Well, I just wanted to thank you very much, Rachel. That was a fantastic summary of developments in the insurance realm. I want to ask you a very simple question, I hope, which is, there's been a debate, hasn't there, as to whether we should be calling the Bayes theorem, the Bayes equation, the Bayes price equation, or the Bayes price theorem. And although that appears to be a very trivial sort of question, it does have connotations in terms of the extent to which the price tag gets more and more used to being used. Do you have any view on that?
It's a great question. I think at this point I'm going to profess I don't want to say ignorance, but I don't have a definitive view on it. I agree that it's a significant historical matter, and I think Price deserves more recognition than he receives, particularly in recognizing, as I said, the possible practical implications of what Bayes had done. But as a historical matter, I'm going to profess at the moment my agnosticism on that question, but thank you for it.
Okay, thanks.
Thank you, Rachel, neatly sidestepped there. I don't see any more questions from the floor, so if I can abuse my position as chair/compere for a moment. Yeah, as I mentioned in response at the end of your talk there, it seemed to me incredibly interesting paper in terms of bringing together those two aspects of Price's thought that I'm now beginning to think of being guilty of seeing as two things that stand apart to some extent. And I guess a part of the aim of this conference really is to try and understand the breadth of Price's achievements across the range of different activities and discussions he was part of. And I just wanted to ask you, as a political theorist who has a specialism in this area, to what extent do you see these papers, these discussions, that sort of scientific mathematical work that Price did as being part of his wider political theory? To what extent can we perhaps see this as being a substantive expression of, for want of a better phrase, his republicanism? Because I just think, as political theorists, we maybe tend to pull those things apart, or we would say something along the lines of, well, this is a sort of the applied element of somebody's thought without necessarily seeing them as constitutive. So I don't know if you had any comments to, that sort of query as to how we can take a lot of the work and ideas you've just been discussing in perhaps trying to broaden our sense of Price as a political thinker and maybe a more sort of developed political theory as a whole.
Great, thank you. Yeah, I think that's exactly what I maybe inadvertently discovered in my research and thinking about insurance, because insurance really does sit at the intersection of political thought and mathematical thought, and developments in the two we see over time have been very deeply linked. So I'm inclined to say that the two are reciprocally, maybe constitutive is a bit too extreme, but deeply interlinked, because developments in mathematics were often responsible for inspiring these kinds of political projects that were motivated not only by sort of pure technical concerns, but by deep normative ones. And I think one sees that also in Condorcet. I think one sees it differently in other thinkers of the period, but one certainly sees it in the following century in the utilitarians and the rise of neoclassical economics and basically a lot of the movements that were more directly responsible for modern welfare policy. So I think part of my project, not only with regard to price, but including with regard to price, is to show how, in fact, political thought and what we tend to see as these more technical aspects of thinkers' work are, in fact, on some level, perhaps even inextricable, particularly insofar as these thinkers were engaged in proposing plans for public improvement, right? That's the clear place at which they come together, because insurance became a means for interventions designed to improve people's lives and, of course, improve the polity as a whole. Insurance might not be the only one of these sort of loci of interconnection, but I think it's a very powerful and prominent one in the history of political thought.
Lovely, thank you. Yeah, really interesting, and look forward to reading more on that. I think we've got one more question just to squeeze in from the audience. Hopefully a fairly brief one from Howard Williams.
Hi, thanks for a very lucid paper, very, very, very interesting. Made dry mathematical stuff interesting for non-mathematicians. I wanted to ask you, it's a query really. Are you aware of the long footnote in Marx's Capital where he has a go at Price, and I was wondering if you could do something to save Price's reputation in the dispute that's there about compound interest. I think is one of the main themes, but it's not too complimentary to Price, and he criticizes Price for helping create a climate, something like that, which led up to the bubble, South Sea bubble, and that he'd misunderstood the nature of compound interest. But I was just wondering if you were aware of it, and if you could provide any kind of defense of Price's position. Thank you. Thanks for a great paper.
Thank you. That's an excellent question, and I think it's probably better at this point that I not attempt to defend Price against Marx, but I'm glad that you raised the issue, and maybe in another paper, it's an opportunity to try to defend Price in that particular regard. But thank you for raising it.
Thank you, Rachel. There you go. You've been given a task as part of the take home from this paper. At that point, I'm going to invite the next speaker to present here in Cardiff. So thank you so much, Rachel. Diolch yn fawr iawn. Hopefully you can hang on with us for the rest of the session. Maybe grab yourself a cup of coffee as well. So yeah, thank you so much for that.